Hello and welcome to the Oanda MarketPulse Morning Market Snapshot. My name's Craig Erlam, Senior Market Analyst at Oanda. Today we have two key standout events for the markets. These are big events which I do believe could have a major impact on the markets both today and going forward. The first is, of course, the OPEC meeting that's taking place throughout the day. The second is the jobs report, which is due to be released just before the US Open at around 1:30 UK time. Now, what makes these events so significant is how big an influence the outcome of them could have on their respective markets. The OPEC meeting, for example, we're expecting a discussion to be held between the Saudis, who are the leading member of OPEC, and the other members to discuss ways in which they could try and stabilise oil prices. Now, you'll remember throughout this year, the Saudis have been very much against cutting production, even if this is a group production cut, as it didn't want to lose market share. Instead, it chose to allow prices to fall so as to drive higher cost producers out the markets. Now, of course, this was probably aimed predominantly at the US shale industry, which is quite immature, very high costing, and with high debt load. So they thought they could force these less efficient producers out the market. Production would therefore fall, and therefore prices would rise, and they would retain their high market share. But instead, production levels have continued to rise throughout the year, and now we've got a situation where storage containers are nearing capacity. Oil prices are WTI Crude has fallen just below $40 on a couple of occasions recently, and there's people talking realistically about $20 to $25 a barrel because of the fact that these storage containers are nearing capacity. These are extraordinary levels that we're currently seeing. So now the Saudis are having to seriously consider an effort to reduce production. Now, this is not something that it's going to do alone. It's not going to reduce its own market share. What it wants to do, we believe, is have discussions with OPEC and non-OPEC members and do a concerted joint effort to reduce production. Everyone retains their market share, but production is cut, and therefore prices stabilise, and we don't see these oversupply issues going forward. Now, whether they actually commit to this at the moment, it's just based on reports. But it's going to be very interesting in the oil markets today when we start to get rumours flooding out, when we get comments from different oil ministers. This will be interesting to see what kind of an impact we have on the markets today. So things like WTI and Brent crude, I think, are going to be very important markets today. The other key event, of course, is the US jobs report, and the reason this is important is the same reason that we've been talking about US data for the last 6 weeks. The key focal point really in terms of the US is going to be whether the Fed will raise interest rates in December. Now, as it stands, it looks very likely. We can see actually from the CME Group Fed Funds Futures chart that there's currently a 79% chance, based on Fed Funds Futures, of a Fed rate hike in December. Clearly, the markets have heavily priced in a rate hike for 2 weeks' time when the Fed decision takes place. Now, what makes today's report so important? Personally, I think the Fed's decision is probably about 95% made up, but that doesn't mean that a batch of very poor data today couldn't influence the outcome in 2 weeks' time. Now, I think it's going to have to be a very significant or very substantial decline in the numbers today. I think we're going to have to see a big downward revision to last month's figures, because October reading was very, very strong. So I think we'd have to see a substantial decline, a substantial downward revision in these numbers. But also, I think we'd have to see sub 100,000 jobs created in November, along with that, for the Fed to potentially, and again that's only potentially, reconsider a rate hike in December. So I think this is going to be a very important report, but most importantly, it's going to get a lot of traction and traction in the market, and could bring a spike in volatility. I say could because quite often we will see a spike in volatility around these events, but that doesn't mean it's always going to happen. And we've had a couple of occasions recently where these big data points have come in broadly in line with expectations, and the market response has actually been pretty small because it doesn't really change anything. It doesn't change people's views, and it doesn't change market expectations. So the market response has been pretty small. So potential for a lot of volatility in oil markets and in dollar markets as well. Now, speaking of markets, I will now take you to some charts, and as you can see on here, WTI is one that I wanted to highlight because we are trading again. Like I say, we've broken below that $40 a barrel on a couple of occasions recently. We are finding stability around these multi-month lows. Now, if we get any indication from this OPEC meeting that we're not going to see these production cuts, then I would expect to see a move potentially back towards these $37.30 to $38 levels. This is, of course, this year's lows. And then if we start to see a move below that, then we could realistically be looking in the weeks ahead, or weeks or months ahead, back towards the low 30s. But again, this is going to be very dependent on the outcome of this OPEC meeting. Now, while we could see a commitment from OPEC to try and engage in discussions about production cuts, it's unlikely that any production cuts themselves are going to be agreed today. So while if they agree to enter discussions, we may see a boost in this back towards the mid-40s. With, again, big resistance levels here between $42.30 and $43. We've got this descending trend line as well, which will be key. If we see a break above that would be a very bullish signal in my view, and that would suggest we could potentially see a move back towards the high 40s in the coming weeks. But again, it's very dependent on the outcome of this meeting. One other chart I wanted to highlight is euro-dollar, because we had that huge surge in euro-dollar yesterday, predominantly driven by the euro, because Mario Draghi very much disappointed, as we highlighted in yesterday's video. Overpromised, under-delivered. We've seen it pull back towards this 110 level where it is now finding resistance. We are seeing some stability in the pair here. If we see a move above here, we've got the ascending trend line, which was previous support, now turned resistance. We've got 110 key psychological level, prior level of support and resistance, 111 just above here as well. A number of moving averages around this level as well. So if we can see 110, 111 broken, then that'd be quite bullish, and I'd be quite surprised at this stage if we actually do see it move back above here, purely just based on Mario Draghi's actions. But it'll be interesting to see if we see that in the coming days. Again, another week that substantially weaker jobs report could potentially bring about some dollar weakness, which may prompt that little bit move higher. But again, it's very much dependent on the economic data. Finally, I wanted to highlight gold. Now, gold prices, of course, have seen a significant weakness on the back of the Fed rate hike being priced in. Of course, there is that strong correlation. When rates are rising, that tends to be bearish for gold, and vice versa. If, again, we see another jobs report which would indicate that we're going to see a Fed rate hike in December, if we see Fed funds futures pricing in a high probability of a rate hike, we could see further selling, and we could see that 1050 level broken, which has provided significant support now over the course of the last week. And if 1050 is broken, I do think it's only a matter of time before we're looking at 1,000 or, well, 1,000 to 1,025, 1,030 this being hit. So a couple of really key levels here, but again, this is very dependent on the outcome of today's meeting, of today's jobs report. For more in-depth news and analysis, check out Oanda MarketPulse at marketpulse.com. You can also find out more about Oanda and sign up for a free demo account at oanda.com. Here you'll also get access to Oanda Forex Labs, which has a lot of great tools aimed at helping you in your trading.